July 31st, the 10-year government bond yield, which is an indicator of long-term interest rates in the Japanese bond market, once hit 0.605%. It has been about 9 years since June 2014. On July 28, as the Bank of Japan raised its long-term interest rates range to 1%, in effect, at each monetary policy decision meeting, bond yields rose. While maintaining the broad framework of ultra-low interest rates, it chose a method of expanding the scope of short and long-term interest rate manipulation policies. The BOJ raised the upper limit of long-term interest rate fluctuations to 1%, which had been maintained at 0.5%. On the day of the policy decision, the long-term interest rate rose to 0.575% and exceeded that level on July 31st. BP equals 0.01 percentage points. Treasury yields move inversely to prices. On the night of July 13, 2023, despite falling U.S. bond yields, Japanese government bond yields rose on that day. The average wage increase rate in spring 2, the spring wage negotiations between the Japanese business world and the labor world was 3.58%, exceeding 3% for the first time in about 30 years. Since 1994, the rise in wages, which have hardly risen in the past 30 years, has led to speculation that the BOJ may revise its super easing policy. It is not easy for the Bank of Japan to reverse its monetary easing policy. Even a slight increase in interest rates in Japan could lead to a serious national fiscal crisis. If the government bond interest rate rises when the US raises it, half of the national budget must be used. Repay the government bonds and pay interest. In the meantime, while long-term interest rates rose due to the US Federal Reserve's tightening policy, the rise in Japanese interest rates was suppressed and the interest rate gap between the two countries widened, accelerating the selling of the yen. In the past, exporting companies earned foreign currency by selling more products based on the weak yen, and then converted it into yen to support the value of the yen. This flow has also weakened. This is because Japanese manufacturing companies have moved their production bases overseas. Companies have become more inclined to reinvest the money they earn abroad. For this reason and other reasons, Japan maintains a large framework of ultra-low interest rates.